Welcome to Turning Hard Times to Good Times. I'm your host, Jay Taylor, and I'm speaking to you from New York City on this, the 14th day of July 2020. I do want to remind you that I publish a newsletter called Jay Taylor's Gold, Energy, and Tech Stocks. You can subscribe to that by going to miningstocks.com. We do want to encourage you to send along your comments, questions, whatever you might want to say about this show, good or bad or indifferent. We'd like to hear from you. So send those to questionsfortaylor@gmail.com, questions, the number 4, taylor@gmail.com. And we do want to thank our sponsors for making this show economically viable. Our sponsors for today's show: Great Bear Resources, Benchmark Metals, Hannon Metals, Irving Resources, Noble Resources, and Sitka Gold Corp. Well, thanks to our son, Scott Taylor, a software engineer who lives and works in the San Francisco Bay Area, I have been made aware of an educational need on the part of investors who are now drawn to invest in gold and silver and the companies that produce those monetary metals. Indeed, gold is on a tear now, not so much because the value of gold has risen, but that fiat currencies are in the process of self-destructing. The average price of gold so far this month has hit a new monthly high as denominated in increasingly worthless fiat currencies. That is, I take the price each day, the London PM fix, and the average so far this month is above where it was in 2011. That's on a monthly average basis. Now, in this process that is just now beginning, an amazing transfer of wealth from fiat currencies to honest money in the form of gold and silver is now starting to take place. Many investors, starting with major hedge fund managers who are capable of thinking for themselves, are recognizing an opportunity to not only protect their wealth from the financial and political storms that are getting underway now, but to actually increase their wealth. However, the mainstream investment community has never been much involved or much interested in the mining sector, and those that are covering those sectors basically are selling the stocks to you that they want to get rid of. So independent analysis is very important, and that's what I try to do, and many of the other newsletter writers that I work with at the Metals Investor Forum. So anyway, my son Scott and I are considering teaming up to provide an online course that can help interested investors educate themselves in order to profit from this transfer of wealth that is underway right now. The economic laws of nature are actually forcing the will of politicians and central bankers to do what they have to do, what the laws of nature require them to do ultimately. They get away with fooling Mother Nature for a while, but ultimately that will end, and we're seeing signs now with the gold price and silver prices starting to rise. I think some of that's starting to happen. So if you would have an interest in a course that would help you prepare to invest in gold and silver bullion as well as the mining shares. We talk about them on this show. Yes, we do from time to time. But in order to really understand how you analyze and how you might look into buying those kinds of companies, we're proposing to create a course that would be available to people if there is a sufficient interest in that. So I think this is the most exciting time that I have seen in the mining sector since I started writing my newsletter way back in 1981. There are some major things taking place right now that we'll be talking to our guests about today and in future shows that are most important. Indeed, Alistair McLeod last week was suggesting that March 23rd was a very important date, March 23rd of this year, in which he believes everything has sort of changed towards an inflationary direction in which there's just everything is tending to go up right now. Everything tends to rise because so much money is being thrown into the system. They're not allowing anything, or they're not allowing the markets to come down. Of course, ultimately, as I say, Mother Nature will prevail, and that is what we're going to be talking to Michael Oliver in just a second about. Michael, I know, believes that as well. So in any event, I really do hope if you have an interest, register your interest by sending us an email at questionsfortaylor@gmail.com, questions, the number 4, taylor@gmail.com. I've titled today's show, COVID-19 and America's Government-Imposed Decline. Jeff Deist, Michael Oliver, as I said, is with me, and Chris Taylor will return right after our first commercial break. Elon Musk now sees the light. He once observed that, quote, if you don't make stuff, there's no stuff. End of quote. Imagine that. Well, he came to understand that the COVID-19 economic crisis is largely state-created And if government persists in keeping us imprisoned in our homes, it is imposing a certain economic death sentence on America. Jeff Dice will join me during the second half of today's show to discuss how growing totalitarianism funded by dishonest money has placed America on the path to financial, moral, and spiritual ruin. I will ask Jeff, who was Ron Paul's chief of staff when Ron was running for president, what he believes is required to restore prosperity to America, and how each of us might try to protect ourselves and even increase our wealth so we can help those around us. By understanding the nature of central bank orchestrated money carnage and market disruptions, this program has sought to protect listeners by advocating ownership of gold and gold shares. And as I mentioned, Chris Taylor will be with me right after the first commercial break to discuss Great Bear's amazing gold discovery in Red Lake, in the Red Lake District of Canada. That Dixie Lake project just keeps getting more and more amazing, and we'll talk to Chris about the latest drill results and what they mean when he comes with us on the show right after the first commercial break. But right now I'm really happy to tell you that Michael Oliver is here. Once again, thanks for joining me, Michael. We missed you last week, that's for sure.
Well, it's great times we're in. Great times.
Well,
fundamentals
ways,
are falling into place.
I guess they are, if you've been an honest money advocate over the years. For sure they are. It doesn't give me any pleasure to say that because of the wreckage and the carnage that is seeming to take place as a result of it. But in any event, in your 360-degree weekend report, you focused almost entirely on the equity markets, which seem to continue to defy the natural laws of gravity. I mean, it's just an economy that's arguably in a depression, and yet we see stock prices rise, and it seems like there's no end to it. But what are your thoughts about the U.S. equity markets right now?
Well, it's a very diverse market. Okay, first off, we have focused at MSA on our all-asset category report. We do about 5 or 6 reports a week, including that 360 weekend report. We have decided to focus on 3 symbols: Microsoft, Amazon, and Apple. Mm-hmm. And if you take those 3 symbols, which constitute about 15% of the S&P 500, and I think about quarter of the NASDAQ 100, those 3 symbols alone, okay, can heavily distort an index's action. Because when we look at the various sectors of the U.S. economy, as represented by ETFs such as XLI, which is the ETF of industrial stocks, or KBE, which is an ETF of banking sector, mm-hmm. and various other sectors, if you look at them on a price chart or in momentum, and compare them to what the NASDAQ 100 or what Amazon, Apple, and Microsoft have just done, they're like in a different world. Mm-hmm. In 1929, after the crash, there was a major multi-month, 5-6 month rally that took stocks well back up toward the highs, didn't achieve new highs. And President Hoover said, it's all over, it's a V-bottom recovery. He didn't use that term, but, effectively that's what he announced. And then the market rolled over and went into disaster for the next 2 years in a full wipeout. Okay. Mm-hmm. If you look at the charts of, let's say, the banking sector index since the crash in the first quarter of this year and the rally that's mm-hmm. occurred since, or look at the XLI ETF of the industrial sector stocks, or even look at the S&P, they haven't gone to new highs. Mm-hmm. They've come back, most of them, about halfway back to the highs, and they've stalled over the last month or so. Actually, even the S&P 500, you can draw a line sideways since early June, and you're below there. And you've been fumbling around sideways. Oh, yeah, there's a good, strong days here and there, but basically there's not been any money made on the upside in the S&P 500 for the last 2 months almost. Mm-hmm. It's stalled. So pay attention, because we've had a good rally from March, April, May, June, July. It's 5 months now since the low. We've had this rebound very much like the 1929, early 1930 rally, prior to the onset of the arduous bear market. Yeah. Not a crash, but just a down for a couple of years. Yeah. Now, the NASDAQ 100 has distorted everything because of those 3 stocks. Mm. There's a few others that tail behind them, but basically you can take those 3 stocks, and they have messed with people's minds and messed with some charts. So that we hear every day on Fox Business News, which of course is pro-Trump, oh, the market's making new highs, this is glorious, and so on. It's mainly 3 stocks. Now, what just happened yesterday, I'm going to stick my neck out. I don't do gut trades.
No.
MSA uses metrics. We have to break certain numbers, and those numbers have not been broken, but they're not far below. Those three leader stocks, we call them, have certain numbers below that aren't that far below that if they break them, in our view, it's over. They're headed down, and in a big way. So the leadership of the market will cave, and at that point, I think they'll join what's going on in, like, the banking sector. S&P steady up today. Banking sector is down 2.5%. Okay?
Yeah.
You got to keep watching
those banks. It's easy to see why that might be happening with the massive bankruptcies that are on their way, especially in the real estate.
On their way, yeah, because they're only beginning. Because, what it takes to get bankrupt is at least 90 days past due type of thing. And a lot of businesses haven't gone 90 days past due until right about now. And so a lot of this bankruptcy wave, I think, is going to hit before the election. And I think it's going to impact the stock market. And I suspect, fundamentally speaking here, that people are going to start thinking about something they haven't been talking about, and that is, what if Biden wins? I think he's going to win, unless he does something totally stupid. I think it's largely dependent on one state, Florida. And right now, Trump is not doing well in Florida. I think if Trump loses Florida, it's all over. And he is losing dramatically against the elderly population in Florida, which went dramatically for him in the last election. And so if that state is gone, the Electoral College it's a wipeout. And now then the market has to decide, okay, do we like this new situation where Biden wants to tax, the capital gains tax is 60%.
Yeah.
Okay, here you are in a risky up-down market as a stock investor, and even if you're right, he's going to take 60%. Think twice. Is that really where you want to be? Okay. Also, he wants to tax precious metals purchases, coin purchases, bullion purchases. So if you want to buy gold, might be a good time to buy it, or silver. Might be a good time to buy it before he takes the oath of office. So there's a lot of events going on here that aren't being discussed, and I think that are actually en route to becoming reality.
Well, I don't disagree.
The other day
from our though, Michael, we're just about out of time here because I took more than I should have myself here, but I want to ask you, how is gold looking now? I mean, it seems to be taking a bit of a breather here, huh?
It looks great. It's at 5 days down from the top day, and today's settlement price is all of about $7 off the top day. Close at the top day. Okay, now silver is the big issue. Silver blew through an annual momentum structure that we've been watching for many months. It blew through it yesterday. It tells us that silver is now ready to engage upside in a way that's more dramatic than gold. Yeah,
well, it certainly looks like it. And the gold shares, the gold GDXJ, GDXJ.
They're behaving quite well. I think they will outperform gold as well, and they already are to some extent, but there's a few other hurdles they need to cross. We're monitoring them for the official breakout on the relative performance. But yes, I think that the better place to be in the coming year is going to be in the miners and in silver as opposed to gold. But gold is the mama, and it's behaving quite well.
All righty. Well, thank you very much, Michael, for being with us again. My apologies for cutting you off. I would like to have you on more, but we'll look to talk to you in a couple of weeks again.
Thank you, Jay.